Joining me now for a closer look at what's playing itself out in that market scene is Greg Katzenellenbogen from Sanlam Private Wealth. Greg, an absolute pleasure and a good afternoon to you. Wonderful, Greg. Maybe we can start off by just taking a look at more red screens than we've seen all week today. I'm keen to get your thoughts on what markets could be contending with this afternoon.
The things that markets are contending with currently.
Yes.
Well, markets are contending with primarily worrying about what will happen to interest rates in the United States. Going forward, when we started the year, there was talk of 4 to 5 interest rate cuts this year. Now there's talk of only one and maybe none at all. So I think that is a concern. The other major concern for markets is, of course, inflation, and what is going to happen, particularly in the United States. Is inflation going to be remain very sticky? The Fed has a target of 2% inflation. At the moment, it's around 3%, slightly above that. So as things stand now, it doesn't look like the Fed will get down to 2% inflation in a hurry. The problem is that, of course, if inflation remains high and America's economy starts to slow down, you could get a whiff of stagflation. So there's quite a lot for markets. Coupled with that, there's troubles in the Middle East and, of course, the Ukrainian war, and then there's elections around the world. So markets have a lot to contend with this year.
Speaking about interest rates there, the Bank of England, I think we're all anticipating what might come out of there. Greg, what are your thoughts on the state of that economy and how that might influence what the Bank of England does today?
No, well, it's very difficult. They might cut interest rates, but the problem is that the UK economy is not in the best shape, and they are struggling, and the Chancellor is having to juggle the budget, and they due an election later in the year. So, and they've been putting in a lot of talking about reducing taxes, but in fact that hasn't happened. And the last time when Liz Truss was Prime Minister and wanted to reduce taxes, the market thought, well, they couldn't afford that. And so I think that will be extremely difficult for the UK. But I think eventually things should start looking up, but it's whether they'll keep interest rates the same or cut, I'm not quite sure.
I must ask you, Greg, if there is a scenario where markets might not like the fact that the Bank of England could cut before the Fed, or if the Bank of England can stand, I think, better than an emerging market currency like the Rand.
Yeah, well, look, the thing is that, a lot of central banks take their direction from the Fed, and that, so it will be unusual for them to start, but you're starting to see that now. Sweden cut its interest rate. There's talk that Europe will cut their interest rates before the Federal Reserve. So this time it will be different. But that means that if these other central banks are cutting before the Federal Reserve, that will still give some support to the US dollar, and that won't be very good for emerging market currencies. We need to see the Federal Reserve to also start cutting rates to see any benefit on the currency side.
Certainly important context there. Speaking about currencies, let's talk about the yen. What a roller coaster has been for the Japanese yen over the last few days here. I see that the central bank there is still speaking about more interventions should the currency need it, especially to protect the price of imported goods.
Well, that's the whole thing. The Japanese yen is recently hit an all-time low. This is exceptionally good for Japanese exporters because it makes their goods pretty cheap around the world. But of course, it's causing a lot of pain in Beijing. The Chinese are very unhappy with the weak currency, and there's worries that the Chinese might devalue their currency because they are at a trade disadvantage with the Japanese. Of course, America is also concerned about the yen because it does give the Japanese economy a lot of benefit, but also Japan has been, they've had very low interest rates, have had negative interest rates. The inflation is very low, but ultimately the only thing I think that can improve the yen at the moment is that if they raise interest rates in Japan, which they've been a little reluctant to do. But the problem is that last week when the Bank of Japan intervened to strengthen the yen without raising interest rates, then the hedge funds are basically saying to the Bank of Japan, we'll take you on. So it's going to be very interesting. But all I can tell you is that, from a global trade perspective, the weaker yen is extremely worrying because it could be a race to the bottom, and especially if China starts to devalue their currency.
Certainly at risk all around. Greg, bringing it back home there, keen to get your thoughts on SAPI. They would have released their second quarter numbers today and also just leading to the half year. What do you make of this performance? They are saying that at the half year, the EPS was 51% lower than half year a year ago. Could be speaking to just demand here, Greg.
Well, it's also, they had very big maintenance. They shut and that took a $30 million hit when they shut their plants. So, it was a disappointing because their outlook for the third quarter is not good. Although they had they beat their earnings expectations in the second quarter, it's the outlook for the going forward that the market doesn't like. Seems to be a bit weaker. But they had some decent. Their profit, they had $29 million profit on sales of 1.3 billion, but their earnings before income tax, that was up about 9%, but closing those plants for maintenance was gave them a $30 million hit.
Thank you for that one, Greg. Keen to get your stock pick in a bit, but first I'd like us to reflect on counters that have found favor with your industry peers.
Going for Disney, I know they came out with results yesterday and the market absolutely slammed them, but the streaming services, Disney Plus, quite a few of them have actually turned profitable, but it's more to do with the share price valuation. A lot of the other companies in streaming services, et cetera, have seen quite a good share price recovery. Disney really hasn't. So I'm going for Disney purely on a share pricing. The theme parks seem to be doing quite well. And the share, I think, is reasonably valued in comparison to the outlook. I mean, it's well off its highs. It's essentially half of what it was in the big boom. So, going for Disney.
Something called L3 Harris. It's yet another defense company. They differ from the Lockheed Martins and the RTXs in that they don't make the big destructive machines or aircraft. They are technology focused. In other words, it's what comes in your cockpit. It's what technology is in your radio system. So they are providers to the bigger companies. 75% of their business is in the US. So they're fairly well supported there, but they've got the chance to export overseas. And the type of product technology they have is becoming very relevant in today's defense spending, which concentrates on technology rather than big killing machine. Forward price ending 16.5. I think they're cheap and they're in the right environment.
I'm going to go with Robix, construction company largely based in SA. Stable operating margins, a good pipeline worth of work. At the last reading, the order book was sitting at around 20 billion rand, which is quite healthy. It does signal that the likes of Sanlam, for instance, are starting to award a lot more work for the maintenance of the roads that we're seeing in SA, which is a positive for the construction industry. There's no balance sheet issues here. They've got good cash. They've got a commitment to return some of that cash to shareholders. They're even considering share buybacks. And I think most importantly, of course, the share price is trading at a discount to where we think it should be trading.
All right, Greg, keen to get your thoughts on some of those Disney, Robix, and L3 Harris technologies.
Yeah, well, Disney I like as a company. The share price did take a 10% hit recently, but I think that's an opportunity to buy it. It's a good quality company. They have an unbelievable catalogue of shows. So they've got a very strong CEO in Bob Iger. He recently beat off an attempt by the hedge fund manager Nelson Peltz to put some directors on the board. So I think Disney is a good long-term stock. On that technology stock, I don't in the defense industry, I don't know the company that well, but I can tell you that it's in the right industry, because hundreds and hundreds of billions of dollars will be spent on defense over the next, in fact, it'll go into the trillions over the next few years as the world becomes a more dangerous place. In terms of Robex construction, we live in hope that eventually the economy here in South Africa will recover. Construction industry does have a lot of problems, but this is, in terms of the construction business, Robex is a good company. So yeah, I like all three of those picks.
With that said, Greg, which counter are you loving this afternoon? So
my stock pick is Anglo American. You would have read that there's a bid from BHP, a very cheeky bid to buy Anglo's. BHP have been valuing Anglo's, excluding Amplats and Kumba, at about £17, and put a value of about £8 on Kumba and Anglo Platinum. I think it's, as I said, it's a cheeky offer. They'll need to pay up for that. But the deal has one big problem, is that they want Anglo to give the shares in Kumba and Anglo Plats to their shareholders. The problem with that is, if shareholders receive those, a lot of the international shareholders won't want to keep Anglo Plats or Kumba and would sell the price down. That would affect the Anglo shareholders. So I think that can be a bit of a deal breaker. They might have to, in the end, look to buy the whole company, but they'll have to sweeten the deal somewhat, and then look to maybe divest from those assets. But the way that the bid is currently structured, it's unlikely to get across the wire. They'll need to pay in total 30 or a little more than £30 a share.
We'll be watching that one very closely, Greg. Thank you so much for your time this afternoon. It's been a pleasure speaking to you. That was your midday markets update with Greg Katzenellenbogen from Sanlam Private Wealth.